The merger of Seven Media Group with West Australian Newspapers is deal-making 101 at the Kerry Stokes Business School, gaining control of a company without the inconvenience of paying a direct takeover premium. The Perth media and bulldozer magnate's pursuit of a $4 billion deal between two companies he chairs and has substantial stakes in is just about the high watermark of complicated related party transactions in Australian corporate history. But will other smaller shareholders share in the spoils? Neil Woolrich reports.
This is a really big opportunity for West Australian newspapers.
Far from the flash offices of Australia's corporate deal makers, small shareholders are watching yet another big merger take shape, which they're powerless to stop.
Certain aspects of that proposal is very unfair on ordinary retail shareholders, though I can imagine that the institutional shareholders will be rubbing their hands in glee.
Roger Pratt has been a shareholder with West Australian Newspapers since 1993. He doesn't like a new plan to make WAN part of a media conglomerate, and he's upset that small shareholders will be diluted if they can't or won't subscribe to a rights issue in the company.
I think the independent directors have got to explain themselves. I find this extraordinary that they would allow their name to be associated with a proposal that is so penal on the ordinary retail investor.
Less than a year after merging his media assets with the Caterpillar equipment franchise, Kerry Stokes is shuffling the deck again. His latest restructure will see the West Australian newspaper join forces with the Seven Media Group.
This is a really big opportunity for West Australian newspapers. We're delighted that the independent board have unanimously recommended this proposal.
You know, we've got a whole group of assets which just moved sideways. What has happened is the valuations have changed radically.
When West Australian Newspapers was run by an independent management team, they looked at deals like this every year, and they could never make the numbers work.
West Australian Newspapers, which is a quarter owned by Seven Group Holdings, will buy Seven Media Group for $4.1 billion by issuing shares and convertible notes, repaying a loan and taking on $2 billion of debt. As chairman and biggest individual shareholder of both Seven and WAN, Kerry Stokes won't be able to vote on the proposal. Independent director Doug Flynn has led negotiations for West Australian Newspapers and says his team has struck a good deal for shareholders.
And I think this massively changes the opportunity for the company over the coming years. It secures WAN's future and it creates a new growth path for us.
A new holding company, Seven West Media, will house the newspaper, television, magazine and internet businesses. Seven Group Holdings, which is two-thirds owned by Kerry Stokes, will keep a quarter stake in Consolidated Media, which has an interest in Foxtel, along with Westrac, which holds the Caterpillar equipment franchise.
That's where the growth is, and you know, I know where I'd want to be for the next 3-4 years in the boom. I'd stay upstairs in the Westrac listed entity.
If I was a West Australian newspaper shareholder, I'd be very concerned at the huge increase in debt load that's been taken with this transaction. And I'd also be worried about what's 2012 going to bring.
It's a very much expanded company. It has diversification that didn't exist before.
While analysts agree the deal is good for WAN's major shareholder, Seven Group Holdings, some estimate it could dilute the interests of WAN's minority investors by more than $600 million, or 1/6 of the $4 billion group. WAN's share price tumbled 14% on Wednesday when it resumed trading, and the proposed deal sparked a raft of earnings downgrades and sell recommendations.
Those shareholders have had a bad ride. You know, it peaked out in 2007 at $16 plus a share, and essentially dilution occurring for incoming institution to make the deal work at $5.20. That's a pretty big reduction in the West Australian newspapers' shareholding position.
We've acquired Seven Media Group for $4.1 billion, and the independent expert assessed it at between $4.6 billion and $5.1 billion. So I think we've cut a pretty good deal for our shareholders.
Mike Mangan from 2MG Asset Management says this deal is straight from the Kerry Stokes playbook, wresting control of a company without having to pay a takeover premium.
Again, there's a track record here that goes back over 15 years, at least, of Mr Stokes buying and selling assets into and out of companies in which he controls. And the funny thing is, he always comes out on top.
Despite that history, Doug Flynn says there's strong institutional support for the deal, with 90% participating in this week's first stage of a $1 billion capital raising. And he argues WAN's share price fall over recent years is largely due to factors outside the control of management or the company's directors.
West Australian Newspapers has the highest margin of any newspaper in this country, and to my knowledge, it's got the second highest margin of any newspaper on the planet. But the fact of the matter is that newspapers have been marked down simply because their future is in serious question.
It's a different story, though, for Seven's television business. Last February, when the Westtrac merger was proposed, Seven Media Group was forecasting earnings of around $300 million for this financial year. In the documents released this week, that forecast has been raised by half to $450 million. And the big jump in Seven's earnings has raised questions as to why that wasn't flagged sooner with a profit upgrade.
I mean, we're only 9 months since the Westtrac deal, and I calculated at the time, I had no problem with that deal. It was the pricing of the deal that I had a problem with. I calculated that delivered about $200 million of additional value to Mr Stokes relative to what he should have got.
We can't ignore the fact that there was a GFC and there's been a fundamental change in the nature of their business with the advent of the digital multi-channels. So we can be as cynical as we like, but at the end of the day, facts might get in the way of that.
Kerry Stokes' main concern now is to convince a majority of investors to vote for the transaction in April. While it may be a bitter pill for long-term WAN investors sitting on big paper losses, Kerry Stokes is a proven deal maker, and he may have already mustered enough support at the top end of town to get this one over the line.